Are you worried about the future of the markets? Please subscribe, like, and share this video on YouTube. The past week has been a turbulent one for financial markets. Global events are making investors nervous. The U.S. economy is still doing okay, but things are slowing down. Inflation is still a problem, which is making it hard to predict what will happen next. One big concern is the trade war between the U.S. and China. The U.S. recently put new tariffs on Chinese goods. This has made businesses worried about the future. The tariffs are also making prices go up for consumers. The Federal Reserve is trying to keep the economy stable. They are raising interest rates to fight inflation. But higher interest rates can also slow down the economy. It's a delicate balancing act. Overall, there is a lot of uncertainty in the markets right now. Investors are being cautious and waiting to see what will happen next. The U.S. government recently announced new tariffs on goods from China. These tariffs are like taxes on imports. They make Chinese products more expensive for American buyers. The tariffs are designed to protect American businesses and jobs. The government argues that China is competing unfairly in the global market. However, the tariffs are having some unintended consequences. American businesses that rely on Chinese imports are facing higher costs. These costs are often passed on to consumers in the form of higher prices. This is contributing to inflation in the U.S. The tariffs are also hurting the Chinese economy. This could lead to retaliation from China, which could further escalate the trade war. Despite the market turmoil, the stock market has held relatively steady. The S&P 500, a broad index of U.S. stocks, is down slightly for the year. However, it has recovered somewhat from its lows earlier in the month. Investors are weighing the potential benefits of a strong U.S. economy against the risks of inflation and a trade war. Some companies are benefiting from the current environment while others are struggling. For example, technology companies have been performing well. This is due in part to strong demand for their products and services. However, companies that are heavily exposed to international trade have been hurt by the tariffs. The stock market is likely to remain volatile in the coming weeks and months. Investors will be closely watching economic data and developments in the trade war. The housing market is showing some signs of slowing down. Rising interest rates are making mortgages more expensive. This is making it harder for some people to buy homes. Home prices are still rising, but at a slower pace than before. In some parts of the country, home prices are starting to level off. This suggests that the housing market may be cooling down. The rental market remains tight in many cities. High demand and limited supply are keeping rents high. This is making it difficult for some people to find affordable housing. The future of the housing market is uncertain. It will depend on factors such as interest rates, the economy, and demographics. Please subscribe, like, and share this video on YouTube.